Let's take a closer look at Medical Properties Trust. This REIT is quite interesting, and I believe that they have the potential to give market returns in the near future. In terms of current share price, they're trading at $13.06, and this means that the market cap of the whole company is slightly less than 8 billion. In terms of dividend yield, we see 8.88%, and if we run this in the calculator, the share price times the yield, we see that the yield becomes 1.159, so almost $1.16 each year with historical dividends. Don't worry, we will take a look at the dividend history as well here later on in the video. But first, is this dividend sustainable? Well, if we look at earnings, we see 45 cents here for each quarter. So in terms of sustainability of the dividend, they clearly have cash left to do other things, and the dividend is sustainable given these earnings. Another interesting point of note is that they have had the same CEO here since 2003, so that means that management has navigated the previous property crisis in 2008. It's also interesting to take a quick look here at dividend history, and we can indeed see that it dates way back. They have a good track record. Indeed, they lowered dividend here once in 2008 from 27 cents here to 20 cents, but they continued to pay out dividend throughout the crisis, and then they continued to raise in the dividend, although it took some time. And today we can see that they're paying out $0.29 here each time. Very interesting. They pay multiple times a year here as well, so that's nice to see for dividend investors. Quite interesting stock in terms of just looking at the business, the valuation, price to earnings ratio here. This is good for a no or low growth company, so very much in line with what they should be trading at. And in terms of just looking at the business and being pragmatic about it, if they're renting out their properties to different medical facilities, maybe a dentist or something like that, these businesses have their property specially fitted for their practice. So maybe if it's a MRA, they have some sort of X-ray. If it's a dentist, they have the chair and the dental equipment. And these leases tend to be long, they're annoying to break, it's annoying to refit a new office. So just think about your local town or city. Do the dentists move offices a lot, or does it tend to be that the dentist stays in the same property for a long time? In my experience, it's the latter, and this also gives some leeway to us investors to be able to look at predictable cash flows. Although, as we can see, a lot of worry right now for the property sector with interest rates going up. So this means that the price has come down a lot for this REIT. It's interesting opportunity. In my opinion, I think that this REIT has the potential to give market returns of about 11% a year for a foreseeable future, given current valuation, taking into account dividend yield and increases in the price per share here. Alright, so that's been it, covering medical properties trusts, and as always, hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.